Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Top Stock Picks of the Week. I'm Tracy Brynick, and this week I'm joined by Brian Hayes with two Zacks #1 strong buy stocks. They're in completely different industries. Mine is in the home side, and Brian's is a miner. So I'm going to lead off with the stock that I brought, my Zacks #1 rank strong buy, AZEK. AZEK is the ticker, which is the name. So that's easy to remember. Let's take a look at what is going on with AZEK. Now, you might not be as familiar with them, but you do know their products. So they make timber tech. So they make outdoor decking, railings, pergolas. They make, I think, house sidings and all of that with that recycled material. Like, you know it. People are putting this on their decks because it lasts longer than wood, and it's better for the environment to use this type of recycled material. Now, they've said that their products are made from 85% recycled materials, so keep that in mind. But they've already reported earnings. That's why they got the Zacks #1 rank. I have been curious about the companies that are in this kind of category, like home related, but they're not actually the home builders. But they had a very good earnings report, and scrolling down, we can see on the price and consensus and surprise chart that they beat once again. And it was a big beat, 21% there on February 4th. Their only miss was back here in 2022. So the shares have really rebounded off of this sell-off, as many have, the 2022 sell-off, and now are trading at or around these new highs. Pulled back a little bit heading into 2025, but are back up there. It's not a small company. It has this market cap of $7.1 billion, and it is not cheap either, as a forward PE down here of 34. But why does it have the Zacks #1 rank? Something good must be going on. So the earnings report was pretty solid. I was wondering whether or not the housing slowdown would really impact them, and it has, but they're not seeing much growth on the residential side other than what they can control, which is cost cutting, making sure they're running a lean machine. And then they did see net sales up 19%, but they still assume a relatively flat repair and remodel market and mid-single digit residential sell-through for the remainder of fiscal 2025. They did just report first quarter. Commercial side is still weaker, and that, there's not much they can do about either thing, residential or commercial, other than just kind of wait it out. But they did raise full year guidance slightly. They were at $1.51 billion to $1.54, and they raised it to $1.52 to $1.55. So a raise is a raise. We like to see it. And the analysts got a little more bullish, and that's where we get the #1 rank. So scrolling down, you can see fiscal 2025 here, right after the earnings report. 5 estimates are higher for this year, 4 for next year, none are lower. Some nice earnings growth here, 20% for this year, 18% for next year. That's very solid. And even on the sales side, 8% for this fiscal year, 10% for next fiscal year. They did give net sales guidance range of 5 to 8%. So this is on the higher end here by the analysts. They're thinking it's going to be a little more bullish, and that maybe the company is being more conservative. Now, let's take a look again at that price to consensus chart without the earnings surprises. It'll give you a little bit better indication of what's really happening. This is very nice on a price to consensus chart. Up and to the right, very nice double-digit growth, as we just mentioned. And the shares are responding. Like I said, they were trading at new highs back here in 2024. But given how expensive they are and kind of this lag on the residential side, we're still waiting for the consumer to kind of come back and invest again in their houses like they did during the pandemic. But that seems to be kind of on hold still. Will that loosen up by the end of this year into what will be fiscal 2026? You can see from these estimates that the analysts believe, yes, it will. But we'll see as we go along. I do wish this stock was a little bit cheaper on a PE basis, but I'm Zach's value strategist, and has more of a growth component right now. Now, all we need is both the commercial and the residential side to really see some organic growth there, and not just from cost cutting or very excellent management by AZEC. So I'm looking for that in the second half of this year, but still a strong Zach's number one rank, strong buy stock. And now I'm going to turn it over to my colleague, Brian, who has the metal miner, and he's going to give you more on that. That's also a hot area. Why is that a Zach's number one rank? Here's Brian.
Thanks, Tracy. Brian Hayes here, bringing you our other top stock pick. I have another exciting opportunity for you, so let's jump right in. Let's start with gold and silver prices. I've been talking and writing about a breakout in gold prices for the better part of the last 2 years, and it appears that move is really gaining steam. We've all heard the phrase, the wider the base, the higher the space, and this move in gold looks like the real deal. Silver is also joining the party lately and pressing up against 52-week highs. Now, in bull markets for metals in the past, we've seen periods where silver outperforms gold, and that dynamic could be getting underway here. But in order for that to happen, I think we'll need to see the dollar move lower. The dollar and these metals typically have an inverse relationship, and as bullish mining investors, we'd like to see the dollar move lower here. My top pick this week is a provider of precious and base metal properties in the US, Canada, Japan, Korea, and China. This company mines for silver, gold, lead, and zinc concentrates, as well as carbon material containing silver and gold for custom smelters. It's a Zacks rank number one strong buy. I'm referring to Hecla Mining Company, ticker symbol HL. Hecla Mining is a leading low-cost U.S. silver producer with operating mines in Alaska and Idaho, and a growing gold producer with an operating mine in Quebec, Canada. Its flagship project is the Greens Creek Mine, located on Admiralty Island in southeast Alaska. Let's take a bit of a more in-depth look at some of the fundamentals for this company. Digging a bit deeper, the Idaho-based miner is part of the Zacks Mining Silver Industry Group, which is currently ranked in the top 8% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industries, we expect this group to outperform the market over the next 3 to 6 months. And as we can see, this industry has really started to outperform over the last year with an 83% gain. And that trend appears to be continuing in 2025. Quantitative research studies suggest that about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. So by targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. We can also see that stocks in this group are expected to experience above average projected earnings growth. This serves as another confirmation signal that this group is a great place to be. And moving to our snapshot page here, Hecla Mining is a Zacks ranked number one strong buy. The company has beaten earnings estimates in 3 of the past 4 quarters and has delivered an average earnings surprise over that time frame of 50%. The stock price is reflecting this bullish theme. This is exactly what we want to see, as it gives investors confidence that the bullish run can be sustained. The stock is displaying strong momentum and is up more than 20% already this year. Only stocks in very powerful uptrends are able to make this type of move and experience such massive outperformance. And looking at the upcoming fourth quarter results, which are due out on Thursday, analysts covering Hecla Mining are in agreement in terms of earnings revisions. Q4 2024 estimates have been increased by 33.33% in the past 60 days. The Zacks consensus estimate now stands at 4 cents a share, reflecting potential growth of 200% relative to the year ago period. Revenues are anticipated to grow 42.6% to 229.2 million during the quarter. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So that's it for this week. Hecla Mining, ticker symbol HL, is my top pick of the week. The company is showing strong growth metrics and should continue to benefit from the breakout in metals. I see more upside ahead for this stock. Make sure to hit that subscribe button. We bring you our top stock picks each and every week here at Zacks.com. From Tracy and I and all of us here at Zacks, thank you for watching. Be sure to tune in next week for more of our top stock picks.